Hello, hello. Let me know if you can hear me. Let me just make sure that things are right here. All right, everyone can hear me. Thank you, everyone. Hope you're all doing well. It is November 21st, 2023. Currently 12:30 p.m. Eastern, and what we're going to be breaking down is the overall footprint. What I'm going to be doing is more of a Q&A kind of explanation of the footprint, talk about some trades, some setups, some different strategies that we can use on the footprint, and how this is an order flow tool that is a very good visual, realistically, based on order flow, right? So, what just happened here? Weird. Let me just make sure all these settings are correctamundo. Is this thing still trading? Yeah, okay. So let's dive into this. Generally, order flow is a tool that allows us to identify where market buyers and sellers are coming into the market, how they react, right? So on and so forth. And what we have here on the footprint is a visualization of the order flow, right? So the footprint is a tool that allows us to visually see where buyers and sellers are coming in at market and in each individual candle. So it's a tool that we used a long time ago at TradePro Academy. It's a great visual tool, but the way I like to use it is slightly different these days. It's a tool that allows me to see where traders are getting trapped, where traders are coming in, right, for them to get trapped, and where the continued traders are. So let me break down what you see on this footprint, right? The areas that you see on this footprint before we dive too deep into this realistically. We're going to be doing this again tomorrow, so I'll compare the DOM and the footprint as we have our Black Friday special that's going on. As you can go check that out on our website. The first month is 78% off at TradePro Academy, something that hasn't been seen or done before. But if you want more information, please just contact Donna at tradeproacademy.com. Otherwise, going back into order flow, right? This is Sierra charts. So if you do have any questions about this as I go through the footprint and look at some examples, look at some potential trades, just let me know. But this is Sierra charts, and what we're looking at here is the comparison of the footprint and the DOM in terms of order flow. Tomorrow we're going to be doing the DOM, today we're going to be doing the footprint. So the footprint, right, there's three main things. Well, no, there's more main things that we should identify. Let's start off with the very basics here. The basics of the footprint, we have these profiles, right? We have one profile here on the more right side, and we have another profile over here that's a little more to the left of that profile. These profiles indicate, right, the one that's closer to the left side, the one that I'm kind of hovering around right now, is the day session profile, right? This day session profile allows us to identify what the general volume on that current session was traded, but it also mainly allows us to break down what the delta at each level is. Now, keep in mind, delta is the difference between the market buyers and the market sellers. So large delta on the S&P 500 suggests delta over 1,000, over 900 to be considered large. So in this case, you can see if we look at the cumulative delta for this individual session in itself, at around 48, almost 49, we have a key delta print that's nearly 1,000. And then down below into the lows, we have a massive delta print that's negative nearly 1.1 thousand. So these are significant because positive and negative deltas can tell you where we have stuck traders or active traders. At a low, if there's large clusters of large negative delta on the larger volume profile, this is suggestive that sellers are actually getting trapped into the lows, which would spark a reversal. And from this 39, This is what we were looking at today, actually, that traders were actually getting trapped. We've already run up into the 51. So a very substantial move to the upside based on stuck traders. It's the same thing. You can look at cumulative delta on the overnight session over here. Now, the other parts of the footprint is that we have down here these 3 bars, the delta bar on the day, the delta on the bar itself, the delta on the day itself, and then the total volume per candle. So each bar, the first one is the delta, net delta on the bar. That means who's in control? Are there heavier buyers or are there heavier sellers on the singular bar? Now, delta that's greater than 1,000 on the S&P 500 futures on the bar is a little more significant, right? So you have 1,000 positive delta on this candle that runs up. That's significantly good on the bull side. The larger the delta on the candles as prices continue higher, right, the better it is for that continued move. Now, if we start to see buy delta that's fairly weak, we don't really have that much confirmation that the upside is going to continue. Like right here, what we've seen is like 16 positive buy delta on a red candle, though. On a red candle, this is suggestive that the sellers are starting to lose steam. Because the red candle, if it has even positive buy delta, that suggests that they're losing steam. Now, the good thing about this is that we had very aggressive, large negative delta on each individual candle. And at a certain point, we started flipping to the bull side. This is where traders were getting more trapped, where buyers were coming. And I got a little trigger happy. I didn't wait for the confirmation. If you're in the live trading room, you know that, right? I was buying before the confirmation, which was somewhere into these 39s where traders got trapped, and we'll explain as to why. But you can start to see how the delta starts changing on the individual candles, which suggests that there is a little more upside momentum. Not only that, but the sell candles that did come in, right, they were on much, much weaker net delta. So the same thing with the cumulative delta. As long as the cumulative delta starts changing positive or negative, you can see the control in that side of the trend. So we were very negative on the cumulative delta until right now in this individual candle, it's fighting for its life, and maybe the next 1 or 2 candles will have net positive delta on the day, potentially, right? So that helps us around with momentum. Now, the final piece of the puzzle on the footprint is going to be the individual candlesticks themselves and what they represent. So each individual candle is broken down into several different parts. We have the market sellers on the left-hand side of the candle, right? So if we zoom in on this, let's look at the current individual candle, if you will. So we have market sellers that are in on the left-hand side and market buyers on the right-hand side. For example, we have 73 market sellers, and on the same side, we have 467. These are usually read from a diagonal standpoint. And sometimes we have a imbalance, which is either red or green based on the diagonal component, but that's not necessarily that important at the beginning. I think that the best way for a newer trader to start learning the footprint is starting to analyze how delta actually shapes up on each individual candle on each footprint. So for example, what I'm looking at right now is a 12-tick range chart. So every 3 points is suggestive that we start a new candle. Now, it doesn't necessarily matter. It could be a 5-minute. It could be a Renko. It's not that important. But what's important is understanding how the delta actually shapes up on these candles. So green candles that are associated with larger green delta, suggesting that market buyers minus market sellers are that much heavier. I would look at 400 plus on the delta schematic. So if an individual level has like 400 plus positive delta, I would consider that a pretty strong area. If it has negative 400 and I guess lower, so negative 500, negative 600, it would be considered a fairly heavy candle on the sell side. So, these individual delta blocks, right, these areas on these individual candles, when they're thicker, right, when there's heavier delta on the buy side or on the sell side, what happens in this case is that there's strength in that direction, there's continuity in the direction of the trend. So when I'm looking at these delta prints, these delta areas, I'm mainly getting my levels based off of a volume profile and distribution theory. But these delta prints allow me to see the strength on the trade side, the continuity of the trend, right? It allows me to see where traders are getting stuck, and it allows me to see where traders are getting reactive on the flip of the market movement. So let's take this step by step, right? So if I have this individual candle right now, this current candle, if I'm looking at this, some might say, okay, well, there's a lot of negative delta at the lows, but there's a lot at the highs. Doesn't that necessarily mean it's balanced? Well, as long as we can continue sustaining this bid right now and holding the prior larger delta from prior candles as key support, then there is still the expectation that prices want to continue to the upside. So I took 2 trades today. You'll see them here on this screen. One of them, well, I guess even both of them were kind of weird. But let's take a look at how the day starts off, right? So, well, actually I had a trade pre-market, but that was from last night, so it's not that important. But the day starts off somewhere into this area, right? And what's happening into this area is that we're not at a general region that I want to get active in just yet. What I mean by that is we're in an area where, oh geez, what's happening? Move the wrong thing. We're in an area where, let me just see. We're in an area where I'd like to start looking for the long side, right? I would want to look for the long side, but we're not necessarily there just yet, right? So if I'm liking to look at the long side, I'm looking for the long side realistically. What I want to see is price in a key area. That key area can be found on distribution theory and volume profile areas. And I'm still trading the micros. This is the small account that I'm doing right now into the end of the year. This small account, right, today is, I think it's up like, from the current individual session, up like $300. Using the overnight as well, it's up like almost 600. But what I've been doing is trading a small account with multiple lots with more fluid entries and exits to show you that it's possible to build up a small account and actually make good money trading micros. So these are micro fills on a mini DOM or on a mini footprint. But what I'm looking at is I have an individual level to buy because we've already escaped from the distribution area, suggesting that the buy side should hold, right? So when I'm looking at this and I'm looking at the footprint, I started buying into 48, which was a mistake, right? This was not a good entry. That was not a good trade, and I'll show you why. At the beginning, what happened was that you can see larger sellers that are coming into the lows, right? The delta on the sell side is pretty solid. Number one, we're not in a good area, right? So I see this, and I'm looking at this thinking these sellers are trapped, and that's fine, right? But the entry wasn't very good because I'm entering at 48. Right, I see them getting trapped in at around 46s, right? And if I want to wait for a buyer, I want to wait for a net positive delta buyer that's fairly close to the sellers that are actually getting trapped into the lows. So I want to see this net buyer pretty heavy. And they come out over here, 700 on the net buy side at 46.5, 46.75, right? With all these sellers getting trapped. So if I were to buy this, right, one, I'm going to do it on smaller size. Because if I do it, because we're not trading in the exact same area that I would want prices at. Number two, I should be entering closer to 46 where these buyers actually stepped in. So, right, if I were to do this again, I don't mind buying it, but I kept the size smaller, just 5 micros. And I bought into 48, unfortunately, right? There was a lot of sell pressure that happened into 49s, but more so, you can see how the buyers trade into 49, right? These buyers, they trade into 49, and what happens is every time they pull down, suggestive that we haven't seen the key area where I want to get in on the long side yet. So when I'm looking at this, right, maybe I should have been buying 46. I still would have gotten stopped. And as I look at this, we have a lot of still large negative delta that comes in on the candles. So number one, if I'm not short, I could short into these large negative deltas that continue dumping. Number two, if I'm not short, I should not start buying yet, right? But I started layering in, right? This was the bad fills. I started layering in, and my average was 41. I bought all the way down to 39 because I bought 11 contracts on the micros. I should have been lowering the size and trading, or I should have been more patient to actually trade the level instead of just layering in continuously. So if I'm looking at this footprint, large sell delta, no signs of buyers. Even down here, large sell delta into 38, there's a notion that they're getting trapped, right? But traders aren't trapped until the big opposing bid steps into the market, right? So they're not stuck shorts until there's a very thick positive buy delta. So there's 700 on the short side here, 400 on the short side here. Okay, nice candle pop on the delta. First decent positive delta on the candle since we've always had these massive large negative deltas. The cumulative delta on the day is hugely negative. They get a little more trapped into 38, 39. They pop it on the bid at 39. Okay, great. They pull it back down. And here they get very convincingly trapped back into the 38s, and they allow this buyer to step in. This area right here, you can see how close the buyers are, how the positive delta shapes up that allows prices to actually pop up aggressively, close some green candles, meaning that's like a 3-point turn, getting traders trapped into the low. So they trade down here, they keep selling, but they can't continue to sell, and they allow buyers to step in on positive delta, right into the 39s, into the 40s. This is the area where I saw it, I looked at it, and I was like, okay, shit, I was early on this. This is the time that they're getting trapped, and it's okay to start getting into this. So you can see as we pop up, all of these sellers on the chasing sell delta are just getting absorbed by the buy side liquidity, and positive delta keeps stepping in on the individual candles. So if I'm a buyer, if I'm someone that wants to see this trend continue, I want to fish out where the positive delta started the original move. So that's the area where pullbacks are acceptable. If you start dragging below that, the trend and the move could be done. So for me, it's between 39 and about 41. That 2-point area is an area where it's acceptable for buyers to pull back down. Right, still big buyers stepping in here, large positive deltas, even on a red candle. So this red candle, still 900 positive delta thanks to all the buyers down into that 43. Right, 41 trades, they get trapped. And there is the continuation. So between 39 and 41, they get trapped some more. Buyers step in. They're still holding out the buy side. Each individual candle is still looking pretty good on the buy side. And this is where we start the move on the larger positive deltas and on the run higher. Where are we trading right now? We traded 52 half. Where's my freaking fill? I don't know what's going on. Anyways, so based on this, right, there's still upside momentum in this market generally. If I'm looking at this delta, because if I'm looking at this footprint, right, I'm just seeing like positive green, like large positive deltas are still holding out. They're shaping up. They're sustaining this price, right? So as long as that continues and as long as the distribution levels hold out, right, I should still see larger moves to the, well, not larger, but continued moves to the upside. So you can see, right, we've got positive delta clusters here, positive delta clusters here. I would say as long as 47 area holds out on any pullbacks, we should probably see that continued move to the upside. So far, all the deltas are positive. What we're seeing right now, we have net positive delta on the day, and here we go. So as we look at this and shape this up, right, pullbacks are probably going to be acceptable into those like 47s, 48s to hold out if that happens. And that continued move based on this delta can bring us back into, well, I guess we're into the mid 50 right now. But final area, if we cluster this region with our net delta on the session, right, somewhere, like I said before, actually it's pretty much the same level, 47 to 48 should hold. Isn't the so here are the questions. If you guys have any questions, just let me know. Yeah, I'm in the Sierra Club. Sierra charts. isn't a green isn't a red candle with positive delta indicative of absorption? Yeah, generally speaking, yeah. That's why I like it for um the turnaround, right? So they're getting trapped based on something like that. Like if there was a red or a green candle on negative delta, right? It'd be a same situation where I'd be like, okay, shit, there's probably going to be some kind of um turning point in this scenario, right? I don't know why Sierra does that. Sierra charts, like some of my fills are like so wonky. Let me know if you have any questions about this. These are 12 tick candles. I don't think the actual candle sizing matters too much. Um, yeah, the thing is, like, I don't. So, like, when it comes to candle sizing, when it comes to preference of candles, I don't think it's that important, to be honest. I know people use a 10 tick, a 20 tick, a 5 minute, an 8 Renko. For me, the main aspects of importance are based on the depth of market and the volume profile. With a footprint, if I want to see where traders are trapped or what's happening in that scenario, right? It doesn't like I don't think it necessarily matters like what the frame of the candle looks like. Could you go over the main distribution for today? The 50-day profile looks kind of thin. The main distribution, realistically, on the day session is based on the escape of the prior distributions, right? So let me just put this away for now. Wait a second. Just trying to see where these fills are. So if I look at the distribution, right, based on distribution theory, these distribution blocks in general, we've exited a distribution, right? Distributions, they suggest that prices move from balance to imbalance. So if today's distribution block is over here, right, we've had this constant balance and sideways movement, right? What this represents is that there's balance to be found here, a home and price to be found in this area, right, generally speaking. And when we look at that, right, we have the escape yesterday of that distribution. If prices are to remain imbalanced, that would suggest that prices will want to hold the top block of the prior distribution, suggesting around the 40 they should sustain a bid. Now I got a little trigger happy. I bought them a little before, but that's fine because I bought them again. But that was the general area. I wanted to trade into that low 40 for the bid to see if we can continue this upside move because generally prices that are imbalanced want to remain imbalanced. That's all. That's all there was to it today. Nothing fancy, nothing crazy. 70 was a top area that we had identified yesterday for the sellers to come in. 40-ish, right, is the area that the buyers needed to sustain if we're going to stay imbalanced. You could have waited, right, like the footprint and see if traders are actually getting stuck, but more importantly, are people actually buying? Larger tick charts tend to show the trend better. That's true, actually. It's a little less intricate, meaning that you might have a difficult time seeing like the rotation sometimes, but they can allow you to stay in the trade a little longer. Yeah, the delta totals are going to be different from any different type chart that you use. If I use a 5 minute, obviously the delta totals are going to be different. But it doesn't necessarily matter if totals are different. It just matters in terms of the the patterning, I guess, or the consistency of the deltas on the day, how they shape up on the candles, right? If you're a day trader, I suggest that you use a smaller framed footprint, right? Yeah, I would rather the negative delta accumulate at lows to trap traders. But to get them trapped, what would have to happen is buy delta to come out, right? Because if there's no buyers and sellers aren't getting trapped, you're just going to see the continuation to the downside. How would you find the next distribution to the upside? If you find the next distribution to the upside, you're probably looking at a larger volume profile from prior profiles, right? Prior time periods to find those distributions. I have a level at 45, like 95 or something. I gotta double check, but you look at larger distributions from the past, right? Whenever prices traded in a level higher. If I were to look for a distribution to the upside, what I could do is actually open up TradingView here, because this could help you identify where these distributions sit. Because I look at past data, right? If I look at past data over here, you can see where the distribution kind of starts, right? You can say, okay, we've got this 70 bottom end of it. You have a key area at the top end, which is 4608. You have another ledge over here that's 4590. So from 4590 to 4608, 4613, 14 is the next distribution higher. Use diagonal or vertical coloring. Oh shit. Do I use diagonal or vertical coloring in is diagonal? I use horizontal coloring if you're asking me about the deltas on the bar. So I guess neither. I find the horizontal coloring good because I want to see at that exact level, right, how many buyers versus sellers trade. I don't really like the diagonals that much. Considered a good entry confirmation. I rushed in today and I bought the bottom close to the same entry as yours based on a hunch instead of an actual entry signal. A good confirmation is waiting to see, right? Is waiting to see the buyers actually step in. Because if I'm going to reverse on a buy, I want larger buyers to step in. So I see a shitload of sellers continuing lower and lower and lower and lower. Number one, maybe the accumulation of the individual candle to have positive delta is a pretty good start. But for me, I want to see large buy delta actually prop price up. So here you have like 300 or so, right? You have 300 that pushes price up, and then you pull back down, right, into this area before trading back into the area again and popping back up. And at that same level, they load another 280 with these guys getting stuck. So what we've done is confirm that 39.5 are actual buyers that are trying to hold out against the sellers. So I'd be trying to enter with those guys as we bid back above them. So you'd be getting it a little aggressively, 39s, 40s, right, with stops below. It helps a little more on the DOM because we'll look at that tomorrow, but the DOM shows me the reaction of the two, so I saw them getting stuck and starting to bid on this first 300 that pops up. Do you look at Nasdaq footprint when trying to make an entry on the S&P? I never look at Nasdaq at all when I'm trying to make an entry on the S&P. There's just no validity in it realistically, because I get all the information from the raw data of the S&P. The Nasdaq has some correlation. I know some people use it as a correlator, but if I see sellers on the S&P, I'm going to sell. If I see buyers on the S&P, I'm going to buy. It's just that's what it comes down to. I know some correlations, right? Nasdaq can lead, but it can be a little, excuse me, misleading sometimes in terms of the magnitude of the move. What does the total volume at the top help us with? This just shows us the net delta on the candle itself, which suggests, right, if there's strong positivity or strong negativity in terms of buyers versus sellers in that individual candle. Generally speaking, green candles, if they have very thick positive deltas on those candles, 800-900 plus, it's pretty good for the continuation of the move. If it's a very large green candle that has negative delta, right, that suggests absorption. Traders are actually getting trapped on the long side. Let me know if you have any other questions. Vicky, would I look at a flip button to take a breakout trade? Well, that's a kind of a convoluted question because I don't take breakout trades, so it's difficult for me to ask for me to answer. I don't like breakout trades. I've never been very good at them. I'm not quick enough to anticipate the movement. I can see when they're trying to form, but in my experience, it takes a larger specific, I guess, volatility and volume for the breakout to happen. So I can't necessarily answer that. I don't like breakouts. I don't take breakouts. I don't know how to find them on the footprint necessarily. Well, what daily volume do I feel comfortable with when deciding to trade for the day? Generally, I trade regardless if there's the opportunity. It doesn't really matter the volume. Like today, the volume was pretty shit, but we found some good levels. I'm still long like one contract. Got a nice like 12, 13 point move, right? Everything's nice. But generally speaking, if you have like over 250,000 contracts traded at the market open, I think that's a pretty good start. The TPA course cover all these explanations in detail. Yeah, for the footprint, we've added some newer resources, but generally the details mainly for the DOM, predominantly for the DOM, the depth of market order flow trading. There are some examples and breakdowns on the footprint, right? More detailed than this, obviously, but so a level to hold or not. The level, like, it's a good question because a lot of people second guess themselves. They get analysis paralysis and they get mixed up when they have a level and they see it trade like a point, 3 points, a tick below it, and they're like, oh shit, right? Shit has hit the fan. If you have a level and you have like a movement like 2 points around it, it's fine. You just start qualifying based on the order flow, right? So let's say you're trying to sell into a level and there's just constant buyers, 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 right? I wouldn't do it until an offer comes in. If I look at this right now, buyers got stuck into a key level into the mid 40s. Some sell side came in. These sellers are starting to open up pretty aggressively. If we pull back to 51, 52, right, and there's a little bit of an offer and they try to sell it, this could be the top and we could be pulling back from the area. It looks like this is a reversal, right? You can see the speed at which it happens, the strength in the sell side that's going on. I would say we start reversing from 51. Can you explain the quality of the colors on the delta or volume? The quality. Like, if so, like the colors, if they're brighter, they're heavier or higher, and if they're darker, they're lower. Is that? Let me know if that's what you mean. I'll answer. Maybe explain the layout of your footprint. Are the numbers bid ask and the candle histogram? Yeah, so this is bid ask, right? Market sellers, market buyers. We got delta, right? Ask minus bid, market buyers minus market sellers here on this side. That's just the breakdown of this. Yeah, so the lighter the color is, the heavier the delta is, right? Which is you'd want to see lighter. How do you differentiate between buyers being absorbed that will eventually break through or buyers that eventually? I think that generally if you're trying to find stuck buyers, right, you just need a reactive seller against it, which is what's happening right now. A reactive seller is a seller that comes in with speed, like downside reactivity naturally, and a lot of delta. So I like to wait for like maybe a second confirmation rather than the first one that drops, right? So the first one dropping here, okay, great. But I'd be a little more confident if it pulls back to some of these larger negative deltas that actually started the positioning, meaning into 51, and it prints the same situation. Because here you're starting to see negative delta shaping up on the individual candles, and we're going back to being negative delta on the day. So there's still some downside pressure on this. So if I want to look for a reversal rather than a continuation, I want to make sure that the reaction against the current move is strong on the volume and delta front, right? High probability targets, Ed, I generally just look at my volume profile levels. I have my key levels. You could also look at the delta on the accumulation of the day if there's a very large delta cluster somewhere. So you can see 1,000 at 41 and 1,000 at 39. Those would be downside targets generally. Volume profiles in those areas, right? Cumulative delta. The speed at a level is always going to be important on order flow, right? Especially when we're trading the DOM, because the speed at which a buyer or seller reacts gives you the indication of how strong that buyer or seller is. So if the buy side continuously grinds higher, it takes like 50 minutes for this thing to rally 10 points, and a seller comes in, whacks it down 3-4 handles in about 2 seconds, you have strength on the sell side. And if the contract sizing is heavy on the sell side, you're probably going to see sellers coming into the market. You always put your stop loss above recent highs because sometimes my entries with the footprint are quite late. I don't always put them above or below recent areas, which, like you said, it's not necessarily hiding a stop, if you will. So it's kind of a pain in the ass sometimes. But yeah, I try to at least. Can I explain a finished auction? That kind of revolves around the distribution theory. I don't really want to get into that right now. I'll answer questions about footprints and whatnot. I don't want to go all over the place. A finished auction is generally seen on a distribution, like on a volume profile, where there's like thin volume that creates a move. So you want to go and complete that auction before continuing in the direction. But if you're in Discord, ask me about it there. I just want to focus on the footprint here. If I see a bull sweep near a zone and then you get stopped out within 1 or 2 points, would you short it? Depends if there's sellers. Everything revolves around if I would I short or buy an area. Everything is going to revolve around are the reactive traders in the block for me to get on board. What percentage of time would you recommend? James, give me more information. I don't even know what that means. Zero prints on the footprint, you take them as exhaustion. I take that as a stop run generally. It doesn't necessarily mean exhaustion. Zero prints are just like continuation moves, realistically. Right? If there's no follow through, then it's exhaustion. So if I'm looking at this right now and I'm trying to short this thing, I want to see them hold the short at 51, 52, right? So I can, if there's larger negative delta into those regions that trade that, right, I can just put my stop above 54 and then just short the area. Let me know what you mean by percentage of time, and then I can answer, because I don't really know what that means. I do like three more questions. But you guys have been great. I really appreciate you guys engaging and asking me these pretty intelligent questions. Not that I expected anything less, but, sometimes. Regarding the level stops, use fixed stop loss or a level. I generally use fixed. I've been trading micros honestly. I've been trading a small micro account, well small, but I started off with like 9 grand US, and I've just been trading between 6 and 12 micros, and I use a 4 or 5 point stop on them, and I generally start layering out at like 6, 7 points profit. So generally fixed stop, but if I can mold the fixed stop to a level, right? Perfect. What percentage of time would you recommend using the footprint as opposed to the DOM? Oh, that's a good question, James. I personally very rarely use the footprint in itself. I'll look at it for a delta perspective to see where traders are stuck in some cumulative delta, but I generally use the DOM about 95% of the time, if not more. But I like the footprint for a visual aspect because a lot of people, um, they're more, how do you say it? they they understand the visualization of the footprint to a higher degree and how delta and market orders actually trade a bit more from a visual perspective. So this is why I'm showing this, because I think it's a good it's a good tool to understand where traders are getting trapped and turning points and continuations as you look to learn the DOM. Now it can get convoluted, but I think it's just an easier component to finding areas of traders compared to the DOM per se. Is this record, brother? This on YouTube, of course, recorded. It's literally alive on YouTube. Yeah, you guys can send me DMs on Discord. I won't DM you first. That's my. There's too many scammers on our Discord. Where I mark low volume nodes, I find looking at the general order flow more of a higher probability thing, seeing where big buyers and big sellers are rather than looking at low volume nodes. I'll look at low volume nodes on a distribution basis based on volume profiles. Can we look at footprints near VWAP, NMA, or just. So the thing, that's a good question. VWAPs and moving averages, I don't use them at all. I know there's a VWAP on my screen. It sounds kind of stupid for me to say I don't use them at all when it's there, but I didn't put it there, I swear. Um, I wasn't the only one making this chart, so just keep that in mind. Um, I don't use them at all. So I use key levels based on distribution theory. That's about it. That's where I find my edge and value, and you can see markets are already dropping based on pretty colors on a chart. So as you go about practicing the DOM and how long did it take to get proficient? I would call myself semi-proficient in DOM reading. It took me about half a year, of multiple hours on a daily basis. The best way to learn the DOM is honestly looking at the replay, speeding it up a little, and seeing how the DOM reacts. DOM reactions and speed at which they happen are the key to understanding how markets actually move and where they move from. So if I look to replay something, I would look to replay the bottom of today, the top of today, and general moves like that. I think that's the easiest way to learn the DOM and the fastest way to learn the DOM. But yeah, I want to kind of wrap this up here. I'm going to do the same thing for the Dom tomorrow. And remember, right, we have a lot of videos on our YouTube in our free Discord community.tradeproacademy.com. So I want you guys to go and check those out and break those down. Also, check out, we got the first month of Trade Pro Academy is $49, right? 78% off. We run our live trading room where you can see all my trades, like even this one, this long that I had. And in Discord, we break down trades, ideas, and whatnot. Also, we're doing a psychology course for the people that do sign up for this. This is privy only to course members, but we're going to open up the psychology course part one for people that are in this monthly program. So I hope to see you all there. We'll do this again tomorrow, same time. Bring the questions. We'll look at the DOM, and I hope everyone has a great day. Trade safe. I'm probably not going to trade at all today, probably very little tomorrow, and enjoy the long weekend if you are logging off for the week. And I'll do this again tomorrow. So thank you so much for everyone that showed up. It was a very eventful, right, breakdown. I really appreciate all your questions, so I'm not just talking to myself. And